Assalamualaikum warahmatullahi wabarakatuh and good morning. As I mentioned to you before that we are going to proceed with our lesson in this topic which is related with the receivable and payable. So for today we are going to do control account for this receivable and payable. Before that, let's proceed with your memory with this diagram. So we recaptured back the previous lesson, which is the recording of the sales on credit and purchase on credit. So you can see here that the document that been recorded in sales daybook for the sales on credit will also been used to record directly to memorandum receivable ledger to each customer. And then for the sales daybook, the total at the end of the month will be posted to the nominal ledger, which is the control account, receivable ledger, control account. This is the total amount. Same as for purchase on credit. So the same document, it should record the purchase daybook also in memorandum ledger, which is payable ledger, to each supplier. So this at the end of the month, the total amount should be posted to nominal ledger, which is payable ledger control account as a total amount. So same go to the related account, which is payment, sales and purchases. At the end of the month, so all the balance of the account will be posted, will be extracted in the trial balance, and is used as preparing for the financial statement. This is what you have learned in the use of double entry and accounting system. Okay, this is the topic that we are going to learn, which is part E of the syllabus. Preparing a trial balance, focus on control account and reconciliation. So this is a control account that you're going to learn. So you already learned that we have two ledger. One is memorandum ledger, which is consists of receivable ledger. This is a ledger for each individual customer, and payable ledger. This is a ledger for each account for individual supplier. And this is at nominal ledger. We have the control account for receivable ledger and the payable ledger. So at the end of the month, we should total out each balance of this receivable or payable ledger, and we have the total balance, and this balance we should compare with the control account in nominal ledger, either receivable ledger control account or payable ledger control account. So if this balance in receivable ledger or receivable ledger control account, if there is the amount is not similar, so we need to do reconciliation. So why the difference between this receivable ledger and receivable ledger control account? Because of this thing, which is discount allowed or discount received, sales return, purchase return, credit notes refund and overpayment, and also the contra entries between the receivable and payable. As for discount, we have two types of discount that you already learned before, which is settlement discount and trade discount. Apart part of this, we also will do a supplier statement reconciliation for this. So this is for payable part. As I mentioned to you, we have two accounts related with payable and ledger in nominal ledger, which is a receivable ledger control account and payable ledger control account, whereas in memorandum ledger we have receivable ledgers and payable ledgers. So this nominal and memorandum ledger, the information posted in this ledger is from the same source document as I showed in diagram before. So as a result of this, the balance of the receivable ledger control account should similar with the sum of the balances from the receivable ledger. Same goes to the balance of payable ledger control account. It should equal with the sum of the balance from the receivable ledger. If the balances do not agree, then an error has been made. This will be identified through a control account reconciliation. This that we are going to do today. Now look at example 1. So this is from the previous lesson. So I won't go long for this example. I hope that you will do it in your own self. So the thing that you need to do is record in a book of prime entry, post to the ledger and balance of nominal ledger, and reconcile the memorandum ledgers to the control account. So I'm going to show you the part D. So this is the answer. Sale debut. So I'm going to go faster for this one. So because you already learned. So this is a memorandum ledger. When we record in the sale debut, at the same time we update. We record in the memorandum ledger for each customer or for each supplier. So at the end of the month, we will post to nominal ledger. As for receivable ledger control, this is the amount that been posted. So since one customer has already paid, so the balance carried down is 150. As for the payable ledger control account, we have the balance of 1,300, which is one supplier being paid by using the amount received from the receivable. So as the bank, we can see that we have received for the receivable account, and this amount have been used to pay for the payable ledger control account. This is the rest account related with this transaction, which is sales and purchases. We do balance for that. And as for reconciliation, first we need to find out what is the total balance for each ledger. So this one is the receivable ledger. So for customer A, we have another $150, whereas customer B, it has settled his debt. So the total for receivable ledger is 150. And we extract the balance in nominal ledger, which is balance per receivable ledger control account. As I showed you before, the balance is 150. So this balance in receivable list, receivable ledger, is similar with the balance in nominal ledger. So we do not have to do the reconciliation because this is already agreed. The amount already agreed. Same goes to the payable ledgers. We have the balance of 1,300, which is come from the supplier Z, which is the supplier what have been paid And the balance in nominal ledger, balance per payable ledger control account, we have also the similar amount of 1,300. So this is other entries that you need to know related with the reconciliation of the payable and receivable control account. So the first one is the contra account, contra entries. So sometimes the business may have a customer which also supplies this business with goods. Means that this customer also the supplier. For example, here, P company is a printing business which sells stationery to F company, a florist. F company supplies P company with flowers and plants for its office. During October, P company sells stationery worth $200 to F company, and F company delivers flowers and plants to P company worth $70. P company has the following amounts in its bank. One is receivable for the F company. So F company is the receivable to P company, also payable for the company. So as receivable, the balance is $200. As payable, the balance is $70. So the two business agree to offset the balances receivable and payable via contra. Then the contra will be for the lower of the two amount, which is $70. So in order to do contra, you must take the lower amount. This will decrease both receivable and payable by $70, and the remaining $130 from the $200 can then be paid in cash. So the entry for contra is you will debit receivable, payable ledger control account and credit receivable ledger control account. This will reduce this both account. Note that the memorandum ledger will also need to be updated for the contra entry. So remember, when we do adjustment by recording contra entries in this control account, so the ledger's account, receivable ledger and payable ledgers also need to be updated with the same amount of the contra entry. If not, the total for the control account in nominal ledger and the total in the memorandum ledger won't be agreed. Next transaction related with the control reconciliation is returns, credit notes, and refund. Sometimes when a business made a sale, the customer will return the goods. Equally, when the business has purchased some goods on credit, it may return them to the supplier. So this is step for sale return. For us, goods are sold to the customer for $250, so we'll debit receivable control account for $250 and credit sales $250. And the second step, customer will pay for the goods, debit bank $250, credit receivable control account $250. So this double entry we already learned before. So when the payment has been made, so the balance on the receivable ledger control is 0. And the second step, so customer return the goods, and it's issued with a credit note. So this is not being paid but being returned. So the transaction entry is you will debit sales or sales return $250, credit receivable ledger control account. This also you have already done before. So this is the reversal of the original sales. So the receivable ledger control account will show a credit balance reflecting that the business owe money to the customer. Also this one is the continuous of this one after the customer already paid. It return the goods. So the balance now for this receivable control account have the credit balance. As we know that the normal balance for receivable control account is the normal balance. So this amount could be offset against purchase sales, or the customer may request a refund. Okay, if the business refund the customer, so the credit balance tadi, the credit balance of 250 now we reverse back by crediting bank $250. Once again, the balance on receivable ledger control accounts is 0. So this is the step for purchase return. The first step is goods are purchased from supplier for $100. So you will debit purchases, credit payable ledger control account with the same amount, which is $100, and then the business pay the supplier. So the entry will be debit purchase ledger control account, credit cash with the same amount, $100. At this point, the balance of the payable ledger control account is 0. Then the business return the goods to the supplier and issue with the credit notes. When this happens, the entry is debit payable ledger control account $100 and credit purchases or purchase return $100. So the entry reverses the original purchase. So the payable ledger control account will show a debit balance reflecting that the supplier owes money to the company. Same as happened receivable when the customer has paid the debt. When it do the return, it has this customer have the credit balance. Then goes to the payable ledger control account. When this happens, this account will have the credit balance. This could be offset against future purchases or business may request a fund. So the credit balance can be offset by the future purchases or business may request a refund. So if the supplier refunds the business, so it will debit bank credit the payable ledger control account with $100. Once again, the balance on the payable ledger control account is 0. We previously have the debit balance. Again, the memorandum ledger must also be updated. So another entry related with the control account is overpayment. If a customer pays too much to settle an invoice or pays an invoice twice, the business will owe the access to the customer. This seldom happens. This may be held and treated like a credit note, or the money is refunded to the customer. Equally, if the business pays too much to supplier, the supplier will owe the access to the business, and as for sale, this may held and treated like a credit note, or the money is refunded by the supplier. Another one is interest on overdue. So this, if a customer is late in settling their account, then entity may decide to charge them interest. This will increase the amount they owe and will be shown as interest receivable in the statement of profit or loss. So the same could apply to late payment to supplier. Interest on overdue account is recorded using the following journal. So you will debit receivable ledger control account to increase the debt and credit receivable, interest receivable. This is in the statement of profit or loss account. So this is as increase in income for the business. Another one is the discount that will affect in control account. We have two types of discount that you already learned. One is straight discount, which is given at the time of the sale or purchase. So they reduce the selling price as inducement to the purchaser, usually for regular customer or bulk buyers. So So this one won't show in the accounting record. So the amount that should go to the accounting record must be the amount net after minus the trade discount. And secondly, the settlement discount offered but not necessarily taken as inducement to settle a debt early. So this one to settle debt and this one to increase the purchases, the sales. Example, 5% discount if settled within 14 days. So if the customer, the receivable paid within 14 days, so this receivable were entitled to get the 5% discount. So this is the terminology that you need to know. One is discount allowed offered by the business to their customer, and discount received by a business from the supplier. Bear in mind that for the accounting account in financial statement, this discount allowed won't appear anymore according to IFRS 15. Okay, this is discount allowed accounting statement. Sales are always recorded net after minus the trade discount. Therefore, the trade discount never appeared in the financial statement since the discount allowed. Okay, this is example. Example 2 related with the discount. So you already learned about this in the use of double entry and accounting system. I already studied in this topic. So you should be able to answer for this one. So I hope that you do this your own. So we are going to look at the next. Go to the answer. The first part. This customer is expected to take the discount. So the sales account should be credited by the amount which is less than 10% discount, is 9,000. So remember that the trade discount we already exclude the amount, which is 10,000, and we exclude again the amount of the settlement discount of 1,000. So still now is 9,000 credit. And same goes to receivable ledger control account. We have the debit side 9,000. When make the payment in time of the credit term, so the amount is the same. So this account, receivable ledger control account, is settled. As for the P, this customer is not expected to take the discount, so the sale amounts we record with the discount settlement as the revenue to the company, which is a record sale as 10,000, include the discount that should be taken out, but this customer do not take the discount. So receivable ledger control account have the debit side of 10,000, but this customer paid early within the 10 days. So this customer entitled for 1,000 discount, so the amount paid is 9,000, which is will debit bank for received amount 9,000, and the credit receivable ledger control account by 9,000. So we have another 1,000 here that we have record debit for receivable ledger control. So this one should be adjusted by debiting sales 1,000, and receivable ledger control we reduce we settle the debt by crediting by this amount 1,000. So this receivable ledger control account will settle zero balance. So the discount received for accounting treatment, purchases are recorded net of trade discount but inclusive of settlement discount. This is different from the discount allowed. As for the trade discount, it's similar. It must be net after the trade discount, but when to record the amount, which is the amount should include the settlement discount. Again, trade discount never appear in the financial statement. So settlement discount received are recorded as discount received, and are shown as sundry income in statement of profit or loss. So the amount that we record is the amount that with the amount of settled discount, and this amount discount receipt should be go to the statement of profit or loss as sundry account. So this is the entry for the discount receipt. You already learned before. You will debit purchase ledger, payable ledger, control account, credit discount receipt. So this is example 3. So you need to show the initial recording of the purchases, record payment for the goods, assuming that I am paid within 7 days, and record payment if the payment is made after the 7 days. So this one you do it yourself and send your answer to me. So we stop here for this part. So we stop here for first part of this topic, which is reconciliation for the control account. So we will do next in the part 2 of control account in other video. Thank you.